Well, Infosys is all set to announce its Q1 results today, and do note that there are expectations that Infosys would be performing better than peers. In fact, the decline in terms of revenue as well as EBIT margin on account of the COVID hit during the quarter would be lower than peers, and hence Infosys is seen to outperform peers in Q1. But again, management commentary would be very keenly watched out for, especially in terms of the speed and scale of recovery. Firstly, just quickly in terms of the numbers, in terms of constant currency, the revenue is seen to degrow nearly by 3.8% QoQ. Dollar revenue is seen at 38 million, down 5% quarter on quarter, with cross-currency headwinds to the extent of 20 odd bips. Analysts expect Simplus acquisition to contribute $13 to $14 million to the quarterly revenues from the retail vertical may see a sharp decline, followed by some amount of moderate decline in banking and slight amount of decline in the communication vertical as well. Last quarter, the EBIT margins had dipped very sharply by about 90 bips due to higher bad debt provision and visa cost, and in this quarter the EBIT margin is seen to decline just around 30 odd bips to 20.9%. The decline in the EBIT margin is seen lower than peers, and of course there have been tailwinds on account of INR depreciation, lower travel as well as lower variable pay. But we of course need to watch out for that how much amount the revenue declines, and also in terms of the utilization levels. Profit is seen to degrow 11.6% at 3820 crore. The total contract value of the large deal wins have been on an average of $2 billion per quarter in the last 8 odd quarters. While deal wins have been good during the last quarter, this quarter we may be seeing some amount of decline in deal wins. The management had also deferred the annual guidance in the last quarter. It is unlikely that we do see this guidance to be resumed this quarter, but again, management commentary in terms of the speed and scale of recovery would be very keenly watched. Besides that, of course, in terms of the verticals, watch out for the outlook of management in terms of the enterprise application business. 30% of the revenues come from consulting and package implementation. Commentary in terms of the demand impact, especially in verticals like BFSI, retail and manufacturing. To know that BFSI so far has been resilient both for Wipro as well as TCS, but retail has seen a sharp dip for both Wipro and TCS. Commentary in terms of the order pipeline, indication of the return to normalcy. Pricing pressure, levers to defend the margins. Management have been focusing especially in terms of cost control as well as cash conservation. So watch out for the commentary on that aspect. Commentary in terms of attrition would be watched out for. Management outlook on the IT services and client IT budgets would be fairly important. To note that Infosys has also, in terms of the dividend payout, it's somewhere around 55% of free cash flow in FY20. Investors are hoping for a better dividend payout and hence capital allocation policy. Watch out for that. Recently, in the Q1 results, TCS MD and CEO did mention that the COVID impact, the worst of the COVID impact is behind, and now they would be tracing the path to growth. Wipro also posted a resilient quarter. Would we see a good Q1 from Infosys also? Well, we will watch out for that.